Blockchain is a structure that stores data in blocks and is shared across computers linked in a peer-to-peer network. As the name suggests, this data is stored in blocks and strung together. Once a block is filled, no one can change it, and it is chained to the previous block in chronological order. Data can be anything like a ledger for transactions in Bitcoin's case or smart contracts in Ethereum's example. How does blockchain technology work? When a new transaction is recorded, it is sent to a network of peer-to-peer computers around the world. This network of computers will solve mathematical problems to confirm the validity of the transaction. Legit transactions are grouped together into blocks, and these blocks are chained up to create a long history of all transactions that are permanent. Why is blockchain technology popular? Traditional record-keeping databases can be hacked or tampered with. A bad actor can erase everything with a delete button. Or what would happen if the databases were under one roof in a warehouse and the warehouse caught on fire? Blockchain technology allows databases to be stored on many computers or nodes. If someone tries to change a record, the rest of the nodes can cross-reference and suss out the incorrect information. Since all transactions are immutable, as they are recorded permanently on the blockchain, transactions cannot be tampered with, deleted, or destroyed. It is secure. Because it is decentralized, transactions on the blockchain can be seen by the public, allowing faster data verification with mutual consensus of users, and not the approval of regulatory authorities. While a distributed ledger is shared among the network of nodes, record reconciliation is no longer needed, leading to increased efficiencies. Time can be saved through the application of smart contracts stored on the blockchain. Smart contracts work on a predetermined set of rules to execute actions automatically. Do check out our video for an in-depth explanation on smart contracts. There is a misconception that blockchain means Bitcoin, so let's clear this once and for all. Blockchain technology was first highlighted in 1991 by Stuart Haber and W. Scott Stornetta. They wanted a computationally practical solution whereby the timestamp of digital documents cannot be backdated or tampered. Bitcoin popularized blockchain technology when it was launched in January 2009 as a new peer-to-peer electronic cash system without a third party. While Bitcoin only uses blockchain to record the ledger of payments transparently, it is the reason for the mass adoption of blockchain technology because of its improved design, which is adding new blocks to the initial chain without requiring them to be signed by trusted parties or a central authority. This beneficial design makes blockchains the backbone of cryptocurrencies. Do you still remember we mentioned the data recorded can be anything? Well, this can be product inventories, deeds to home, votes in an election, and much more. This brings us to interesting use cases of blockchain technology. Before we move on to that, smash the like button and subscribe to our channel if you find value in our video so far. We thank you for your support. Use cases of blockchain technology. Banking and finance. By incorporating blockchain into banks, customers could deposit a check during non-business hours and still be able to see their transaction process in 10 minutes, as this is the time for a new block to be added to the blockchain. Banks can exchange huge funds between institutions with more security and faster speed, instead of waiting days for the settlement and clearing process. For everyday consumers, there is no longer a need for a middleman like banks, as they can do peer-to-peer money transfers instantly across the world. Cryptocurrency. This is a given, as blockchain technology is the foundation of cryptocurrencies, allowing them to operate without a central authority and with reduced processing and transaction fees. This opens doors to countries where banks or financial institutions are not physically available. Consumers can transfer currencies with just a mobile device without an intermediary. Cybersecurity. Organizations are not immune to cyber attacks like unauthorized access and tampering of records. Blockchain can identify malicious attacks as data cannot be tampered with. Since records are transparent, the path of the attackers can also be tracked. Healthcare. Patients' medical histories, health documents, and current medications can be stored on the blockchain, and only relevant parties can access these records with the patient's permission. This means doctors from different hospitals can have the same information since the records are on the blockchain. Patient data can also be updated in real time across the different locations securely. Human resource. Blockchain can help do away with verification checks on potential hires as identity and employment history are already verified by previous employers on the blockchain. HR routine activities can also be streamlined. An automated payroll system can be further improved by tracking changes, minimizing fraud, tracking time and attendance, and so on. Intellectual property and patents. Blockchain can act as a notary for important transactions because all data is timestamped. Blockchain can easily provide evidence of the time of creation, information on the creation, jurisdictional requirements, and much more. Insurance. Viewing of policy information usually involves human aid, increasing the chance of errors, delaying claims, and increasing cost. Policies can be converted into smart contracts, allowing a consolidated view of policies, verifying claims, and so on. Music. Users pay for a subscription fee, and the blockchain can track which music and how often it is played via smart contracts to automatically calculate and pay royalties to the respective artists. Property records. Blockchain can remove the need to scan documents or the time spent tracking down physical documents in the local office. If property ownership can be stored and verified on blockchains, house deeds are accurate and permanently recorded. Supply chain. Blockchain can digitally record when each batch of food was produced, the origins of a product, the number of stops the food made from the farms to the supermarkets. This is useful when trying to track the path and safety of food from the source to our dinner table. This application can be used to track mundane goods and even prevent counterfeit goods. Consumers can verify goods bought are authentic and come from the original manufacturer. Parcel tracking is also possible when blockchain is implemented into postal and shipping companies. Travel. Customer details stored in blockchain by the travel agents can be accessed by flight companies and hotels. Luggages, especially with multiple flights, can be tracked and passengers can be identified quickly, thus shortening wait times. Blockchain makes accessing and storing important information easier and seamless as it is shared across the whole travel industry network. Voting. Physical voting is slow, while digital voting is prone to hacking. With blockchain, voting can prevent election fraud and increase the number of voters due to the convenience of voting online. Since blockchain is public and immutable, the voting is transparent and the chances of fraud is greatly reduced. Before we end this video, let us recap the pros of blockchain and highlight some cons of this innovative technology. Pros of blockchain. Reduce cost by getting rid of third parties. Improved accuracy by eliminating human involvement. Difficult to tamper. A shared ledger with many nodes makes it hard for hackers to tamper. Transactions are secure and private. Cons of blockchain. Negative impact on the environment with mining. Low transactions per second. For example, Visa can process 65,000 TPS, while Bitcoin manages 7 TPS. High cost in implementing blockchain technology. Records cannot be amended. Since data is immutable, blockchain cannot go back to change a record if there's an error. While there are negatives to blockchain technology, there are also many practical uses for it. It is no longer a question of whether industries should adopt blockchain technology, but a question of when they should adopt it. Let us know in the comment section which is your favorite use case of blockchain, and check out our video on Soulbound Token, an NFT claiming to be the future of Ethereum. See you there.